Hi, it's Chris Lamm with Commerce Home Mortgage. Thank you guys for watching this month market update. It's the month of May. We're going to talk about a couple topics, jumping right in here. We want to talk about the housing market. We have a lot of clients, it's 2017 and we're seeing a very similar spring that we've seen over the last couple years where there's just not a lot of homes on the market. Here in Redding right now, there's some of the lowest inventory we've seen in a long time. And we still have a lot of clients that are getting beat out, multiple offers on properties. One of the statistics that I just recently saw, year over year, nationwide, purchase applications are up 5%. Even with rates being up higher than they were last year, we're still seeing a lot of steam in the housing market. And basically what it comes down to is a shortage of homes. In California especially, we're seeing a massive shortage of homes, and what that means is there's just more people entering the market than there is homes available to meet that demand. And one of the very interesting things that I've noticed is that exists with people that are trying to rent properties too. We have a lot of clients that are buying investment properties and renting them out, and I've got a couple different property managers that I work with. And one of the common things they're telling me is they just don't have enough homes to meet the demand of people that are trying to rent properties right now. People that are buying investment properties are getting top dollar for the rental market, and it's really, really interesting. So, going forward the rest of this year, most experts are predicting that this current housing market is going to continue to pick up steam and remain, very, very tight and tough for people in that 200 to 300 range to find houses. And so they are finding houses, but it's just not as easy as it used to be. The other thing I want to just talk about, I do this generally once a year, is I want to pull up a slide and talk about the benefits of renting versus buying with today's market. Okay, so what I mean by that is I'm going to talk about this is with today's price being higher than it was 3, 4, even 2 years ago, and today's interest rates being slightly higher. So if you check out this slide here, we're going to focus on the top left quadrant here. We're going to use today's average purchase price in Shasta County and the average rent that someone's going to pay for a very similar house. So if you look on the left here, today to buy a house in the $280,000 range, which is kind of the average price, it's going to cost you about $1,686 a month, including taxes and insurance. That same house, 3-bedroom, 2-bath, average square footage, 10 years old or so, is going to rent for around $1,500 a month. And if you go straight across to the right, you're going to see that 9 years from now, with the current rental appreciation rate, that same house is going to rent for $2,073, which means in 9 years, you're going to pay $10,500 more to rent that house than you would have to own it and lock into a 30-year fixed. If you drop down a little bit ways down here, we start on the left, the expected selling price in 9 years with a 4% appreciation rate, which is actually conservative for California, that same house would sell for $398,500. That's almost 10 years from now. That's a $280,000 house. The equity through amortization, which means the loan amount that you've paid down in 9 years, will net you another $45,000, and the tax benefits to the right here, assuming a 25% tax bracket, is going to save you almost $30,000 in tax dollars. Either you would get that back over 9 years in refunds, or if you owe at the end of the year, this would be the tax benefit to you owning a house and being able to write off the interest, etc. And so that's a really big deal. If you take a look at this, over 9 years, someone that buys nets about $177,000 over renting, and they're locking in their payment that's not going to change for 30 years. So it's really interesting because we still have people ask us, hey, what does it look like to buy today? I know prices have come up. I know rates are higher. Well, this kind of tells us right here that it's still a very, very good idea to buy. The last thing we're going to update on is interest rates. Right now, rates are running between 4 and roughly 4.25%, depending on the type of loan you're doing, how much money you're putting down, etc. This week, being the first week of May, is a big week. The Federal Reserve is going to have their minutes this meeting. We still have some global news that's having an impact on both stocks and bonds, which affects mortgage rates, with the Korea situation, with President Trump's tax reform and his dealings with NAFTA. All of these things are having an impact on the stock market and the bond market, which is what changes rates. No one really has a crystal ball, but what we predict is that rates are going to stay right around where they're at, and they're going to continue to slowly go up over the next 8 to 12 months, putting them in possibly the high 4s by the end of the year. So, you know, if you haven't bought a house yet, if you're thinking about refinancing and taking some cash out to do a remodel or something like that, you might want to make sure you take a look at the numbers right now. Other than that, we really appreciate you guys. Thank you for taking a look at this month's video blog. If you guys have any questions, you know you can call me anytime. Have a great day.